Monday, April 10th, Stan Ehrlich, market analysis. Well, we started out on the soft side, and before I even go there, I always start out with the stock market indexes, the S&P 500, the SPDR, my favorite, the DIA, the Dow Jones, and the QQQ, and sometimes mentioning the way that the Russell 2000 is moving, and a forecast, of course. So let's go back to Tuesday of last week with the S&P 500 and the DIA. We have a bearish engulfing ER sell signal. They typically occur at major turning points or minor turning points. And the stress here is turning points, the high day or low day. October 13th was our last incredibly good end of the bear market of 2022 and the beginning of the bull market of 2023. And I do believe we're in a bull market. So if you have any questions, comments, info@ersignals.com. Now, we started coming down a little bit after Tuesday's bearish engulfing. Wednesday popped up a little bit on Thursday. Friday was a holiday. Today we are still lower on the day by a very small amount at the moment, almost exactly 1 point, hardly anything. An active S&P 500 would move up and down a point in a matter of at least 30 minutes, maybe a lot less than that, sometimes less than 5 minutes occasionally. So it's a very slow day so far. What we've done is tested the support from Wednesday and Thursday of last week. Remember, Friday was a holiday, Good Friday. And coming down today early, we hit the lows of, again, approximately Wednesday's lows, and Thursday was a tiny bit lower. And today we're almost exactly the same for the low of the day today as last Wednesday. We're coming up at the moment, a minor overbought condition on an extremely short-term 1-minute chart implies that we're going to run out of steam for the moment. But again, this is 9:50 California time. There's tons of time, 3 hours and 10 minutes, essentially half the day before the market closes, 1 o'clock California time. So if we get higher than yesterday's high, I don't have any change of opinion because it will not necessarily cancel out what I expect to be a bear move. I should rephrase that, a correction, a downside correction, a small dip in the market in a longer term bull market, which started October 13th. And soon, and I think maybe this month, we're going to see it at least above 412, which was the high of Tuesday's bearish engulfing, and then challenge the highest high for many months, going all the way back to September. Again, I think that's going to happen in the next couple of weeks before the end of the month. But first, there is a gap to close around 396.5 approximately, and that was only from about a week and a half ago, and it's only approximately 11 points lower than where we are right now. A big, reasonably weak down day, we would see it drop 10 points without a problem. So maybe it'll take a day or two under the bull market circumstances we have right now. And in a bull market, downside corrections are not particularly sharp and violent like they are in a bear market, falls apart. So I'm not surprised we're doodling around here for today, the third day after the reversal. I do expect it to take out today's lows, maybe not today, but possibly in the next day or two, and then of course a new low for a week or so, and be on its way down to, I think, 396.97 to close that gap, and then a good buying opportunity and the beginning of the next wave up, which will probably bring it up into the teens, and it may even get up to 420, a new high for many, many months. That's kind of what I'm expecting for the next couple of weeks. If there is not that downside correction and it's just simply starts to get stronger quicker, it's kind of a good sign for the strength of the bull market overall. But because of the sell signal on Tuesday, the bearish engulfing red ER sell signal, I am expecting that gap to get closed at about 11 points lower. Okay, enough of the S&P 500. Let's go look at the DIA for a moment. And today there is not really any significant, let's get rid of that, any significant change in commentary. I see that just in the last few minutes, very recently here, since I had my back turned, so to speak, we just popped into new high ground in the last 10 minutes or less. And that's just for today. But we've also made it above the high of, well, let's just take a quick peek here. Today's high so far is 335.45, 5.45, and that's certainly above 530, Thursday's high, but 545 is exactly to the tick the same high we had on Wednesday of last week. We're at a minor area of resistance. I don't see any particular reason why the market would want to go any higher than this. In fact, I've got to mention that this could be a very good place to consider a short sale. That's a personal opinion. I used to have a commodity broker's license for 35 years, a stockbroker's license for a few years, and eventually became the hedge fund manager for a short period of time. So you have to say what you need to say when you need to say it, even though to the average person it doesn't look right and doesn't sound right. I'll say it a different way. When the markets are going up very strongly, very quickly and get overbought, watch out. It's not looking that strong. It's actually looking like it's going to turn back down again relative to oscillators, and it usually does. If you are going down too fast, too quick, and it's a bear market and everybody's jumping off of buildings and margin calls, etc., that's when you need to put your buying shoes on and get ready for a major buy, a la October 13th. Perfect example of those psychological conditions. So, momentarily, we might have hit a little high, and the beginning of the wave down that'll break the lows of the last 3 days in all of these indexes. Now, the one that's doing the worst at the moment is the QQQ over here, and it has not made a lower low like all the others we just mentioned than the last couple of days of trading, and it is not coming up quite as nicely, quite as quickly to the unchanged or the high, which is very close to the same number of Thursday's bounce. So what we have is an inside trading range day mostly, except the DIA. And that's a doji, and it implies that the market is just kind of waiting for something, and there's an indecision for the moment. And is it worthwhile taking a look at, let's take a peek here, at the 2000s, which has popped above the high of Thursday and Wednesday of last week, but it's sitting right at those levels at the moment. And that actually happened much earlier this morning, not on this bout of strength that we have in the DIA, QQQ, and the S&P. So kind of mixed signals momentarily, not surprised. Remember, we got dojis, and that means it's kind of wandering around sideways on the average. Hey, we got some brand new signals in futures contracts. Here we go. I'm going to talk about the interest rate futures to start with, and they did apparently stop right around the previous highs we saw in January. Yep, middle of January, which established a resistance area that was a little bit higher than the previous highs that were in early or mid-December. So you've got December highs slightly higher in January. And guess what? We have it slightly higher here in March and April. Now, we didn't get higher last few days than the March high, but it's almost exactly the same, very, very close. And we're dipping down again, second significant down day in a row, coming down away from that resistance. How far down? Well, you would expect it to challenge 114, give or take a little, a point and a half lower than where we are now, 15 and a half. Maybe even a bit lower than that. Remember, I've been saying for months and months now, I expect that the interest rate futures, 10-year notes and bonds, and this is 10-year notes again, they are both building long-term bottom formations of some sort. It could end up being just a big sideways trading range. There could be a definable formation involving it, but I can't see it yet. There looks like maybe a sloppy head and shoulder, but I'm not even going to talk about that. Certainly a double bottom, and the upside breakouts above the highest high between the two lows so far didn't pan out. It didn't stay there. We made higher highs and then pulled back. Now, for the next chart, the bonds, we see the same exact thing as the 10 years. Slight higher highs in a resistance area, like periscope up on a submarine looking around and then popping right back down again. And it got overbought on that day as well. And that was Wednesday of last week. And since then, Thursday we're down, today we're down again. So I'm expecting 129.30-ish for a downside correction. And again, maybe a little bit lower. But I'm expecting some sort of a significant bottom formation to develop. If I can peg it for you, I'm going to. Next chart, crude oil. Ta-da! Today, against resistance, stopping the market rallying in the last week or so, in an overbought condition, we have a bearish ER sell signal that's turned the price action red. This is my sell signal. I've been working on it for well over a decade. In fact, whenever you started thinking of these things, but you never remember that, could be 20, 30 years. This bearish engulfing, previously called a outside down day or key reversal bearish, is the beginning of the downswing, in my opinion. Now, we're not quite lower than the low of Thursday, which I would like to see have happen here. Just a second. 79.65 Thursday's low. Today's low so far is 79.671. So we're 6 ticks above Thursday's low, which is a little below Wednesday's low of last week, which is about the same, I guess, as Tuesday's low of last week. So we're looking at almost a full week's worth of new lows if we can make a slight little bit of new lows. Otherwise, because the market was open for a very short period of time, Sunday afternoon, we have an outside trading range. We are definitely higher than Thursday's high, but I'd like to see this get below Thursday's low. I think Thursday's a more important key reversal numbers, and therefore we have a key reversal only relative to the very short trading range of the previous day. My opinion is the same. I mean, we bumped against resistance, a reason to go down. We got overbought, a reason to go down. And there's a gap below the market. Look at this big gap, all the way down to 75.60-ish. Yeah, 75.70 maybe. And we're 79.90 at the moment on crude. So yeah, now we have a bearish engulfing. And again, I'd like to see it get below Thursday's low. Next chart, soybeans. The bullish engulfing of a few days ago did come up fairly nicely, and I'm looking for the market to turn around and start to rally right back up again. So far, that's not happening, so I'm a little concerned, but I haven't gotten stopped out. We need to get below, touch those yellow dots. Remember that ER1 got long at around 1484, and ER3 got long on Thursday at higher levels on the retracement of 1495. ER1 certainly, which is built for scalping, or if it's a really good trade, you can keep it overnight and see if there's follow through, which there was for a day. And again, that was the end of last week. Or was that Tuesday? Monday, Tuesday, Wednesday. That was Monday of last week. Then it stalled out. So ER1 definitely made some money. Not fabulous, but decent. And ER3 is questionable, probably a little loss at the moment. You can change your stops whenever you want. That's the ER signal trading system for TradeStation. Next chart. Bean oil. Same story here. Bullish engulfing, end of last week, not particularly working very well at the moment. ER1 still made some money on a day and a half, and ER3 may have a little bit of a loss if you're still in it. I don't think this is a bad place to consider a long position. You want to use those 53.92 as a potential sell stop, no matter where you buy it, right around this area. I mean, next, soybean meal. Bullish engulfing did not work the end of last week, and that's behind us now completely by a couple of days. I'll just keep bringing it up to see what happens next. Next chart is gold. We got the bottom of the market on gold, platinum, and silver. All three of them, we got the low day around the same date. This bullish engulfing, February 28th, was the low of a double bottom, small formation over 2 weeks or so. And up you went, and we haven't had any other signals since, just a sideways pennant a little bit, and then a new highs, and we're coming back down somewhat. Still bullish, but it looks like it's losing momentum. Next chart. Platinum got the low day, in this case, February 27th, outside up day. ER3 got in. We've had a new high just last week, and today we're having a little downside correction. Don't see anything wrong here. I'm not turning bearish at this point at all. I still look for higher levels, but we caught the bottom day at the end of February. Great. Next. And we got the bottom day in silver back on March 10th. Notice the dates aren't exactly the same. End of February, early part of March. But we now have a second. Today, again, is a brand new sell signal, ER sell signal. All we have to do is continue to stay below the closing price of the previous trading day. And given that, which looks highly likely, we will have a bearish engulfing relative to the previous trading day. But because of that holiday on the 7th, Friday, there was a small trading range. I'm not sure the signal is particularly valid. That's a problem. We don't encounter this very often. Holidays are fairly rare to begin with, and having a reversal immediately after, I'm a little suspect. I'd like to see it get below Thursday's low. That would change my mind completely, and I would trust the bearish engulfing ER sell signal. But you can understand that because there was only one tick on Friday, the holiday, stocks did not have any trading. Futures did have a little. The system thinks that it's got a signal. I'm a little questionable about that. The fact that it didn't make a new high for the trend on the strength earlier and then is now around where it opened closer to the low is not good, but it's not really a sell signal. Next chart. Live hogs. I got the same kind of comments here because of the small trading range we had on Friday. This system thinks it's got an outside up day, which is true, but we really wanted to get below Thursday's low, although we're now higher than Thursday's high and sitting right about at that price. It's not quite a bullish engulfing buy signal. Grain of salt. Next chart. Corn. Sell signal definitely last Wednesday. Outside down day. Oversold conditions within the overbought conditions within the allotted time period. Went down quite a bit on Thursday. A little tiny trading range on Friday. Essentially an opening bell and a closing bell, maybe at the same moment. A token. We have an outside up day, but it's not oversold, therefore it's not green, and I have no problem with this bounce. I'm still looking for lower levels. Next chart. We've got natural gas broke the support level over a week ago, has stayed below that resistance level now, and is coming up to it again. So I'm looking for, I don't have my RSI showing, do I? Just 1 second. Let's see if I can bring it up pretty quickly. And ATR, yes, here we go. We are nowhere near overbought or oversold for that matter, right around 50 almost exactly. And that doesn't help me one bit. Resistance level, yes, should turn down right around here. If it closes a little higher or above that blue line, it's not particularly bullish. It implies it might have a little bit more strength, and I'm seeing 2506 as maybe the next likely stopping point if it closes a little stronger than where we are. Next chart. Wheat. Bullish engulfing bottom in the wheat market a couple of weeks ago is still fine. We still have longer term positions are still long. I still look for new highs, pushing up against that 735 resistance area and getting through that, I think, to maybe work its way back up to 8, 11, 10. Next chart. Cocoa. Nothing new here. No comments. Got overbought. Kind of going sideways, which does eliminate the overbought condition. Next. OJ. Got overbought. Starting to pull down a little bit. I expect a little bit lower level, but basically bullish. The trend is up. High-grade copper, neutral, sideways trading range, not close to oversold or overbought one way or the other. Trade the breakout to the upside one way or the other or downside. The trend is up, which favors the upside, but we've had quite a bit of sideways here. Maybe it's topping out. Really can't tell. Next chart. Sugar. Don't do it. Too strong, much too strong. RSI hit 91.82 to be exact. This is a custom relative strength index. It's not exactly the same as Wells Wilder. I learned it from Wells Wilder himself in the 70s and 80s. And I've modified it over the decades. So it doesn't do exactly what the original does. We call it, of course, the ER RSI. But it's too strong, too quick, too much, and should produce a top of a minor amount real soon. Maybe it's today. I probably said that the last couple of days also. But don't run after it on the upside. Don't buy it here. Heating oil, neutral. Next, live cattle, new sell signal, doing okay. Talked about it earlier. Except, I'm sorry, mistake. We have now gotten stopped out, point blank. You did have a small chance to make a little bit of money with the scalp version and the ER3 version as well, but you had to be kind of fast, and it was a day trade or maybe one overnight position. So it jumped up on Thursday and went right through the resistance and the high of the bearish engulfing, which is my failsafe, and is staying there. So the trend is up, and I think it's going to work its way higher. Now, we did get extremely close to the last important bottom. And if you were still long from that buy signal on March 24th, our system does not get out and go short just because we got a new sell. If you're long, it waits until the long is stopped out and you are flat. Then we follow any new signals. Next chart. S&P 500, obviously I'm looking for the market to start to drop down. At the moment, it's not really doing that. We're only down 60 cents on the day, very slowly working its way back up. Not a particularly volatile day, fairly uninteresting so far. Next, and 10-year notes we started with. You guys have a great day. See you tomorrow. Bye-bye.